Hey, I had no idea that the stream wasn't live. Well, hold on. Can you guys hear me? I swear I thought I clicked that live button. I'm sitting here talking to myself for the last 30 minutes. Oops. Oh, well, there you go. Sorry, today's a disaster. I'm back. That is so weird. I don't know. I swear I clicked the go live button and I don't know what the hell happened. All right, you guys, let's go. I don't know. I swear I clicked the button. First person that typed that said, who was it? Kevin. I said, why announce the stream? That's what I'm saying, you guys. If y'all don't, I'm sitting here just not even noticing. Thank you, Kevin Foley, for saying something. Jesus. If y'all don't say anything, I won't know. Y'all have to tell me. I didn't even notice y'all said something. There we go. I didn't see anything anyone said up here. Like, everyone's like the stream. I'm just like, and now my trade for done. It just seemed like y'all things are going business as usual. Here I'm asking questions, nobody saying anything back. I'm like, maybe everybody's just busy trading. That's hilarious. What do you mean upper DD band seems to be off on your platform? Lee? No, I mean, like, when you're saying it seems to be off, relative to what? Like, if you're saying it's off, what's your baseline that you're comparing it to? Yeah, I thought the stream was on at Polygon. I'm sitting here talking to myself like an idiot. Well, there's two buttons you have to click to run the stream. Like, run the stream from my encoder, and then I have to go to YouTube Live and hit Go Live. And I swear I clicked that Go Live button, which actually takes the stream live. Like, I'm broadcasting to YouTube, and then I got to broadcast from YouTube live to you guys. And that button apparently didn't get clicked. I'm sitting here talking to myself and having a great time and streaming. I had some great content this morning. You guys all missed it. Well, my cats heard it, so at least they have a great view of what the market's doing after CPI. Lee, let me start over. In risk interval for ES, you're seeing 44.96. Correct. Your upper DD band on screen is higher than current price. The one in the risk interval is showing 44.96. Okay, so risk interval, S&P, 44.34, 44.96 for the U contract. I'm still showing the U contract. If I were to change this to Z, we'll have the Z contract on there. Is not drawing the Z contract. Okay. Oh, look at this. This is a bug. Okay, let me do this. No, but see, the Z contract is drawing the U contract. So good. Yeah, so I'm still showing you. And so it's not a bug, but it's something we talked about last time. It's a programming limitation that we didn't account for, so we're gonna go in there and we have to write something to fix it. So like the DD band, the way that we designed it, and this just comes down to just making it in pieces. So right now, the current trading front month, even though traders roll over into Z and are likely trading now, our system's designed to not automatically roll and pick a rollover date or anything like that to the new contract. It'll keep you up by default until it expires. So what we need to do is have a reference point based on a selected contract user. So you come in here and you can say like contract month, and you were to pick like, you know, A, B, C, D, E, F, G, you know, whatever letters, then it would adapt your risk intervals to your DD bands to the risk interval and the relative close price of that contract itself. Monthly resilience looks frozen. Yeah, let me see this really quick. The small charts, it looks frozen. That's odd. It's correct here. It's moving around. Oh, good call. It's on the small charts. Yeah, I didn't notice that yesterday as well. The new release had this bug. They're still working on it. All right. All right. So today, bear long up, support at hedge pressure, looking for that. Regular monthly, half gap resilience is being negative, so we are trading below half gap. This was a clear as day sign. There should be no confusion about this one coming down. Did y'all see this? This was an easy to see bear trap. Easy to see bull trap for the day. With the resilience is going lower than 0. Let me make sure I have the right resilience on there. Negative 1.7. Wait a minute. Is this the right? Actually, no, both of them are off. Make sure I'm connected. I'm reconnected. Yeah, good question. Well, the resilience on the chart is correct. So I don't know what's happening with the small charts today. Let's just turn those off. We have a little note to pick those. Investigate that. So actually just sitting here, res is now actually less than 0. We're floating around the middle here. Like I said, one of these days where it's not really a tradable day. We've had like 3 or 4 tradable, non-tradable days in a row. It's really not easy to trade this. There's not a lot to say. And it's good, right? You can see that not every day is going out. We nice clean run. We're sitting in the middle. Res is positive, so we support here. You know, we open kind of mean reversion. Once you hit the wall and hit back the middle, market's random from here, so it's just doing random stuff. Sitting hedge pressure for support. If there is a long entry, one could trade from here, but again, you have limited upside. And of course, I look at this and just say, it's not really worth taking a stab at, right? The resilience, yellow and white cross each other. LJ, they crossing each other doesn't mean anything. Hold on. Give me a second. I'm about to speak into space. Yeah, if you want me to run any numbers for you guys this morning. Well, I can run a liquidity map on the XLE. The XLE is a specific setup called a belong down. What it is you have this kind of downward pressure landing on monthly hedge. So this is what it's looking at right out the door, trading lower towards 92 on the XLE. So we're looking at the energy sector altogether. There is support and monthly hedge pressure. So I think we're pulling back to a nice bull support. This is a bullish setup. 91.5 is weekly options hedge pressure, and then monthly hedge pressure is 92. So they're both right on top of each other. And so that's a really strong support for that energy. And so I think that that's a great place for the market to baseline and pivot. Anytime you lose, like we said earlier, monthly hedge pressure is a gauge of market collapsing into OPEX. And so if we start losing any of those with velocity, it can cause sell-offs rapidly leading up to Friday, because a chain reaction of just basically put sellers chasing shorts. So what you'll see here is that what I expect is that the market typically holds most of the time. It doesn't like to break. So if it breaks, is a caution. So right now, energy is looking great, I think. As far as, when inflation goes up, especially in this environment, you see that people start to hoard, commodities type, energy type stocks and futures, that people go into those kind of trades to know that they're going to appreciate inflation. Example is oil. If inflation goes up around the world, oil being the primary, if you think of it like a currency for many countries, they throttle production to raise and lower the price to beat inflation. It's kind of like diamonds. If inflation is hurting, the Saudi Arabian economy, and they need to, stretch the power of their wealth to match and beat inflation, all they have to do is cut production and raise prices. And so that, you tend to think energy goes up, or like oil prices go up when inflation goes up, right? So ticking up, you can see that as a possible sign for the CPI is ticking up, possible sign for bullish energy, things like that. So one of the relationships I learned trading oil back in the day is that it pretty much the value is set so that so that countries can have their income not be affected as much by inflation or other things like that. So.
Texas Tech, anything is possible. And as Red Raiders,
All right, guys. Sorry about that. We're doing a little talk about what's going on with CPI and how the market's just kind of the market. Like what I said on Spaces this morning was that if you were to have like a bowl, like a cereal bowl, and you were to fill it full of U.S. stock market, and you put some milk on it or whatever you like, almond milk, regular milk, take a bite, what it tastes like, right? Tastes bullish still. Has like bullish flavor to the cereal bowl. It's delicious. It's bullish. It doesn't taste like shit. It doesn't taste horrible, but it doesn't taste great either. It's kind of like when you put frosted mini wheats in a cereal bowl, all the icing, melts off and goes into the milk, and you're eating the frosted mini wheats and they're kind of soggy. It still tastes kind of good, but they're losing the integrity, right? So it's kind of how the market is right now. It's like it's got a hint of still being sweet, still being bullish. It doesn't want to die yet, but it's having a hard time moving fast. There's no volatility. The market's extremely liquid. There's not a lot of breakout opportunities from here. This is like a premium seller's dream come true. The market is just not moving. It can sit here for a while. We're going to need a new options month to probably spark or stimulate something in FOMC. Another type of announcements will have to create a catalyst. Clearly, CPI coming in today with a slight miss on the expectation and also a slight build. 2 months in a row, the year-over-year data has come in a little higher. Having an uptick in the CPI numbers. One would imply that if inflation is starting to draw, like starting to sort of come back in any kind of force, one could argue that the Fed is going to continue to raise rates to, in their narrative, to fight that. So the idea is that, on the surface, the perception should be that that is bearish, but I don't like to take noisy data that's week or month over month like that and make a generalizing assumption that this is going to shift the entire Fed policy. Missing by 0.1% is just noise. And so, in all honesty, the CPI is a non-event. That's what I talked about this morning. Non-event, nothing to worry about, nothing to celebrate either. And the market's going to maintain the course. DD is still extremely bullish. There's enough market cap still bullish to keep the entire stock market from falling. As you see, we're in a consolidating month. Monthly maps show neither bullish nor bearish for SPY. So it's kind of like, or QQQ. You look at both of them together, the market is just bittersweet, and they're trying to be bullish. You got volatility this week, trying to be bullish, but having a hard time doing so. But it's not bearish either. It's an interesting phenomenon. So it's trying to be bullish, but it's not bearish. That's why I say it tastes like a bowl of soggy frosted mini wheats with the icing all melted off. All right, so any questions you guys have right here for me, I'm going to ask about it. So draw on the screen. See, all your bear zone is way down here. Market is not bearish. It's trading literally in no man's land. So what we're going to see is once you get past what we call the iron wall of monthly expiration, you will have clarity. So after Friday, so the market's just not doing much. Remember, since the Fitch downgrade, the monthly map's completely shattered. We don't have any bull zone up here. No bull zone. Where's the bull zone, right? It disappeared for the month. And then the bear zone is still showing short squeeze. So that's where the market's maintaining its ability to not collapse on itself and sell off right now. The idea that the bears are still covering shorts while there are no bulls doing nothing. So no bulls, right? Really no bulls. The bulls have frozen their action. People are done buying for now. The bears are still covering. So what that means is over time, this likely is still to grow and start to accelerate and speed up. All things being equal. Now it's going to be a slow move until we can see some bull support in the monthly map. But as everybody sees right now, the recipe is purely short squeeze going forward. Does everyone see this? It's kind of like a small short squeeze. While you have no more bulls in the picture, you should see that the long side of the market is not getting any longer, right? So this is the long side of the market. As a matter of fact, the Commitment Traders report shows that long side is selling a little bit, and there's not any bulls coming back in the future. So if you put the two of them together, Commitment Traders is going to show you what happened in the past, and monthly maps going to show you what's happening going forward. As you see, longs have been selling, and there's no new longs stepping in. So you're getting that kind of consolidating pullback pressure. Very similar to what we saw back in 2021 right here. If you start to see shorts covering, which is what we also saw back here, the market can continue to rally on a short squeeze. And as you see, looking into the future, the shorts are still looking to cover. So if one were to, put a gun to my head and say, make a trade now, I could say, well, I'm not going to bet on market collapse, lack of volatility for the next 2 or 3 months. The forward curve is showing VIX below 20 all the way through December. I would bet that there's just a slow, squeezy type move. I would bet that the end of the year does this before it does this, as the data implies. Now I will shift my thesis as the data changes, right? If the bear zone starts to creep up and get higher. But as you guys see this right here, whatever opportunity, whoever paid off those folks at Fitch to do this, create an opportunity for themselves. And I believe that that's exactly what this is going to be. That's how I feel. Hey, LJ, where are you flying to today? To answer your question, when resilience is crossover, that doesn't mean anything. They're two independent numbers. But resilience is a tiebreaker at two different places. So we just have them drawn in the same place for simplicity. The white line is the tiebreaker. Actually, let me draw them with the yellow color. The yellow line is the tiebreaker when you get to there. When you get to here, res greater than 0, res less than 0 is the tiebreaker at those levels. That's all the differences. When they cross over, they don't mean anything at all. You don't even care about the yellow resilience until you interact with the yellow line. Just like I'm not using resilience unless I'm interacting with the white lines up here. So resilience has modes. It's the tiebreaker here. So this is res greater than 0, res less than 0. When they cross each other, they're not related to each other. So don't think like traditionally that means anything like a typical traditional indicator. Yellow is used exclusively. Like when you're right here, we're looking at yellow. When you're right here, you're looking at white. Up here, you don't care what yellow does. Even if yellow were to plunge, it's not actionable. If yellow resilience were to plunge and we were right here, then I would bet that monthly hedge pressure broke. But I don't bet that a resilience is going to pivot the market to hedge pressure, if that makes sense. Just like down here. The difference is resilience pivots the market. Hold on, ask me a question on Spaces. What's up, bud? Like resilience, right? So one of the major things in Rocket Scooter is all of our tools that we've created in the base platform are different than what most of you may be used to. As y'all been here for a while, listening to the space. If you're new to the space, it's kind of like to show you what we have is we have indicators that are different than the traditional set of indicators. Most of them are designed to be forward-looking or designed to take advantage of arbitrage. They're not like price action indicators. So resilience is one of what we call the big three, and resilience is actually a gap fill predictor. It's used on the index products, and it can predict if the gap's going to fill to the upside or fill to the downside. So gap and goes or gap fades are really what it's designed to do. We have a monthly resilience as well, which is it's utilized to be a tiebreaker on monthly hedge pressure, which is one of our big support or resistance pivots that we use. So when you get to it, we have an indicator that predicts, is it going to break or hold? They're really cool indicators, so it's giving a lesson on the difference between the two. And so like today, S&P is kind of holding where it opened yesterday, so where it closed yesterday. We kind of opened flat. Resilience has been hugging 0, and it's just went positive, right? So as resilience ticked positive, the market traded right up to fill the gap to the upside on SPY. So that's kind of the neat thing that resilience is designed to do, to pivot the market. As we fell a little bit over the last 20, 30 minutes, res just ticked up, and then it just ran up to fill the gap. It's a neat toy, one of our favorite tools for predicting like intraday moves and sentiment and stuff. So right now it's just bouncing around, but it's neat how it works. Yeah. Stuck in the middle.
a lot of people say the same about SPY though. And the choppiness, I guess I'm just know SPY better, more comfortable with it. Apple did get that rate back above monthly hedge in a 5-minute close. Looking like retest it here would be providing an opportunity, but again, it's just little everything's a little more risky today for me. We've already secured some gains on the day. Don't know that I'll be taking another position, to be honest. Again, it's like not the glamorous part of trading, I know, but it'll save you a lot of money.
Yeah, I took the NQ long about 5 minutes ago, scaling the third here. If we can get back above, let's call it 375. Let's see, 375. Yeah, above 375. I'll add to that.
So Simon says, why are the orange lines squiggly for lack of better description? Which orange lines?
I mean, no, SPY's good too, but tech has just been a little more hyped up, like Ashton was saying this morning. Apple is holding that monthly hedge. Now that needs above that 176 again, where we were trying to get those calls above earlier.
Looking for Qs to make a move for 374.50 here.
Good. Get that breakout. Nice. Sheesh. Solid morning though. I mean, definitely tougher. Yeah. Tougher for me, but good. It's tough with these days, especially. I know you like to play that break below hedge. I like to play it too a lot of the time for puts. It's tough on these days. And go back and forth. Yeah. That's one of my favorites though. On a nice trend day, you get a high volume break through hedge pressure. I love to take that next candle that retests of those the high volume.
In the resilience box, they usually are flat. Well, not usually flat. They've just been flat lately because we've been trading above monthly hedge pressure. So,
See here, we're at pre-market highs. Checking so far. No position I would be taking here. Might be a breakout seller. No time versus a breakout buyer. What's the volume today? I'm like, numbers are we looking at? Numbers are just low on the volume side, gosh. Everybody's sleeping in this morning. 12.5 million. Usually running with quadruple that. Again, if you look at SPY on the daily, gosh, we have not done anything the past 4 days, really.
oh, I'm trying to work with my developers here.
Leading right into op-eds. Not really a coincidence. Jordan, I gotta hop off if you so. Anyway, no worries. Cool. Minute wrap up here.
Always, can we check your sockets, please? Okay. Okay, yeah, it's back on.
Blake, glad you're day one here, trying it out. We do these weekly, so hopefully as you continue to kind of learn alongside it, you'll be calling stuff out often too with us.
All right, guys.
Today, appreciate everybody for being on again. If you want access to it, you just heard from Matt. Really potent tool. I did pin it in top of the space and post it, but if you really can't find it, you just DM me, ask for the rocket scooter data or hedge pressure. I guarantee you, once you are looking at it, trade off daily, you're not going to go back. But appreciate everybody that did tune in. Looking forward to the next space.
Yes, sir. We'll be hopping on Mountain Space, so anybody that wants to keep live trading on Spaces will be going over to Mountain Space at Live Market Talk. So see everybody there. Great morning trading, and we'll see you guys next week.
Thanks for coming, guys. All right, guys. Sorry, I've been in and out. I was in space this morning. Now I got yard people over here cutting the yard. Long day. Good morning. That typing speed? Oh, dude. I type so fast. I always brag about my one useless skill that I don't really get to use much anymore is my speed of typing. Oh, I could type so fast. I can write email in blazing speed. One idea, I'm starting my live trading challenge. I'm probably gonna aim for Monday. Monday sounds like a good a good time. We have so many huge things we're working on. It's been like a distraction for me being able to focus on just doing a trading challenge. But now we're good. Like I'm gonna have what I was trying to wait for is to get all of the Pro Plus stuff finally wrapped up, all the little bugs that we were dealing with, the risk intervals and the D bands and all that being drawn correctly. Last little pieces. And so as soon as all that's done, I don't have to like in the middle of a trading challenge be like troubleshooting little things. So this is like pretty much almost there. By Monday we should be fully addressed all the little tiny bugs and things looking good, and me just ready to just kind of jump in and trade. Apple seems to be really making the monthly line move. Yeah, let's take a look at that, right? Let's talk about why that is. Monthly resilience is very sensitive to stocks breaking monthly hedge pressure that are heavy market cap like Apple, as you see right here. Do you see how Apple just breaking monthly hedge pressure is causing turbulence? Just one stock, and majority of the stocks are trading above monthly hedge pressure. You see it's like in the upper 90s, right? As it's pegged out up here almost. Just one stock alone is enough to create sensitivity, right? Because it's designed to be sensitive right at the line for all the stocks in the index. So if all the stocks are up here and just one stock is trading at its monthly hedge pressure, you're going to see the S&P moving really rapidly. And the bigger that stock is, market cap wise, the bigger the jolts are going to be. So Apple just moving this much is causing monthly hedge pressure to move that much. As you see, Apple moving that far from here to here, very little effect. It's neat, right? So monthly hedge pressure resilience isn't like an oscillator. It's only sensitive. There's like a sensitivity transform. It's only sensitive when you're near the line. When you're farther away from the line, it's not sensitive at all. This axis is 0. This is 100. Turn your head on your side. Right here, Apple moving like this is big moves in resilience. Apple plunging like that, resilience is barely going to move. So Apple with a tiny little move like that, resilience is going to dip really hard. Isn't that cool, Simon? So that what it does is it gives you that exact tilt, like on a seesaw, on you just barely being over the edge of one side or the other. So it's showing that overall market balance, which is really neat. So you can see that sensitivity. So when the S&P is at its own monthly hedge pressure, you're eyeballing all the stocks, and like essentially it only takes one Apple to move like that to start toppling the S&P over when it's breaking its S&P. I mean, it's breaking its monthly hedge. Such a neat tool. All right, you guys, I'm gonna call it for the day. I didn't make any trades today. We've been really busy. There's been a lot of things going on in house, which is good. We're working on that. We will have a Zoom call today. Sorry I didn't have one yesterday, but we'll have one today for sure. And we will see you guys in about 2 hours for that. Okay, talk to you later. Have a good one. Thanks for tuning in.